Is this the week that rates go below 6% for a 30-year fixed rate mortgage? This is your host, Ron Wojciechowski, for the Black Hole of Real Estate, and it's about to come true. We've been talking about this on this podcast for more than a year, about what was going to happen with rates in 2025. And predictably, because we predicted it last year, rates are about to get below 6%. And here's how it's going to happen. If you were to look at the national reporting, you would see that rates today, as an average, are 6.19% for a 30-year fix. It's down a little bit from last week at 6.23, so it's gone down a little bit. And if you're looking at the 15-year note, that's 5.44%. So we're trending downward in both categories. Now, the popular and one that most people use is the 30-year fixed rate, and this is the one that we're really going to focus on and pay attention to right now. Because there's a Fed meeting on December 8th and 9th. And now we know the rhythm of how this is going to go. Rates will continue to go down every day between now and the 9th when they make the official announcement. So December 9th, you're going to hear an official announcement. And I wholeheartedly believe it's going to be a quarter-point reduction of the Fed funding rate. So with that, we're going to see most or all of 0.25% coming off of mortgage rates between now and the 9th. Because it's happened every time. We've talked about it. We know that the market is going to price in this change. And that's the anticipation. My suspicion is the rates are going to pop up just a little bit after the announcement because everybody priced it in really fast. And then competition is going to take over. And I believe some lenders are going to be aggressive and get loans in and written before the end of the year to get a jump on 2026, because that's when most of those loans will take about 30 days to close, and then they'll fund in January, get them off to a good start. So what's behind all of this? Well, if you think about it, there was 3 rate drops right before the election for the president, a year ago in 2024, and then there wasn't any sort of reduction until the last couple of months. And now we're seeing a quarter point, and each time the rhythm has been the same. There's no reason for this to not be the same way, because this is historically how it's been. As we approach a date where the Fed is expected to drop the rates, the market prices it in. Now, what I've been saying for more than a year is that rates are going to touch down to 5.875. And I believe that we can get there, even though it's a little more than a quarter point off. I think we can get there. So when rates get down to 5.875 available on a 30-year fixed rate mortgage, that's probably going to happen next week. It's going to bounce back up to 6 is what I think is ultimately going to happen. So if on a lucky day you want to get below 6%, probably next week is your best opportunity for a little bit to get to there. So expect rates 5.875 to 6% Monday, Tuesday, Wednesday next week, probably in that area. And then when we get to the 9th and 10th, you're also going to see, which is going to be Tuesday, Wednesday, you're going to see that maybe pop up just a little bit to 6. So I think you're going to see rates about 6% through the end of the year. And if you get luckier on the discount points and aggressive lender, then I think you might get under the psychological barrier of 6%. My suspicion is you're going to see more rate drops in 2026. Maybe not every meeting. And I don't know that that would be a good idea for every meeting, but perhaps the next couple to get rates into the mid-5s is probably where it's going to live. I don't think we're getting back into the 4s in 2026, but I can see a world where between 5.25 and 5.5, riding that out, by the end of next year and just stabilizing after that, which is really good for consumers that are looking for lower monthly payments to combat the higher cost of homes. What I don't think we're going to see is the price of homes coming down, because it hasn't happened. The doomsayers have said the market's going to crash. The numbers won't support it ad nauseum. And yet for every report out there, the market's going to crash. This is going on 5 years of this. It still hasn't happened. If anything, the price has gone up dramatically during that time. And for those that were hesitant to buy 2, 3, 4, 5 years ago, there would have been a lot of built-in equity if they had done that. What we can say is today, if the same pattern holds true and we're in the rates between 5 and 6%, it's going to be pretty good. And prices will continue to rise because that's just what's happening right now. There's no data to suggest that property is going to be flooded on the market and be devastation when it comes to selling it, because unlike 2008, most homeowners have equity. The ones that don't have equity, they probably bought in the last year or two with 100% finance through a VA or a USDA loan, or maybe they did an FHA loan with 3.5% down, but then they got 3% back in closing costs. If those people are looking to sell within a year or so, they are absolutely people that could be underwater, but it's a small segment of the market. The vast majority of the people who bought over the past few years, they've seen enough increase that even if they got the same price for the house and then to pay closing costs and commissions, they still have some money in their pocket, and that's what we're looking at right now. So to refresh this in your mind, watch for rates over the next few days to get a little bit below the psychological barrier of 6%. I think we're going to hit 5.875 for a minute, and then it'll probably be sitting right around 6%, and then it's all bets are off after that. I think you'll see rates continue to trend into the fives between now and the first quarter of 2026. So it's good news for homeowners. It's great news for rates. And if you're a seller, it's kind of good for you too, because now buyers have a little more buying power. And if you're the home's been lingering in the market, you too can participate by selling your home. And then you can also purchase with a lower interest rate. So I think it's arrows up for everybody right now. I'm looking forward to the data next week. We'll report the end of next week once we can see what the data trail did and what the Fed did. And then we'll surmise what's going to happen next. If you got questions about interest rate or home sales or what's going on with the market, you definitely need to subscribe here. This is your host, Ron Wojciechowski, for the Black Hole of Real Estate.